Okay, just give me 2 minutes. Let's find the right one. I'm a trader, so I've got lots of monitors. I'm not sure if I'm trying to compensate for something, but there you go. Can you see my screen right now, the two heads? Or have I got
Yes,
the
the
wrong screen?
the two heads with gears in the middle.
Yeah, that's the one.
Okay.
Okay, well, thanks for that, Teddy. Am I good to go?
Yes, sir.
Okay, that's great. Right, so hi everybody, my name is Peter Davies. I hope you're all well today. This is a picture of me. Apparently pictures make me look fatter, although my wife might not agree with that. Now, I've been in the trading game since the mid-2000s. Not coincidentally, that was just after my financial advisors managed to lose 30% of my net worth, and I decided to take over from them. And at that point, basically, I figured that even if I lost money, I'd still save on fees. So that's kind of where I was at. Lost a lot of money and just not trusting anyone in the industry. Now, at that time, I was regularly attending networking events in Singapore. If you don't know Asia, Singapore's got a massive financial center. And there were always a lot of people at these events from the banking and proprietary trading world. People that spend their time at desks like this one all day, doing things you can do at home, and also people doing things that you couldn't do at home. You know, meeting guys that work for big banks doing barrier options on Forex. You're never going to be able to replicate that. And what I did when this happened to me, I started engaging with these traders to really find out what they did. And at the time, I didn't realize how lucky I was compared to most traders trying to pick up trading skills, be having access to these people. And even luckier, as I kept those contacts in the professional world over time, a lot of those are now friends and some of them are even customers. Now, I talk to traders every day, and I see traders fail and I see traders do well. And today, we're going to take a look at what made some of them successful, what made others fail, and what helped those move from being a failure to a success. Now, one of the most frequent questions I get asked, and most frequent questions traders ask themselves, they've got this burning question. Traders want to know, can I trade? Do I have what it takes to trade? Am I wired wrong? Is there even one way to be wired to be a good trader? So people want to know, do I have the right personality for trading? And of course, if the answer to that is no, that's quite a disappointment, right? Because you can't change your personality anyway. Now, a friend of mine used to work for one of the most gifted traders I ever met. He managed to amass about $15 million in his mid-20s with a combination of borrowed money and what would be best described as very good intel, the sort that Martha Stewart would be proud of. Now, he ended up trading for a boutique hedge firm, doing what a lot of equities day traders try to do nowadays, which is basically looking at earnings announcements, news, stock scanners, trying to figure out which stocks are in play and then trading them. Difference between him and the guy at home is he had 4 full-time researchers that would not only tell him what was in play and how the stock usually reacted, not only tell him what was in play, but also how the stock usually reacted to a hit or miss on earnings. Because some companies intentionally underestimate and then over-report at earnings time. So great stuff. Very regular 6-figure days. Very regular. When I say 6 figures, I mean over $100,000 a day. So you would think this would be a guy that would be happy. But if one of those 4 researchers missed just one opportunity, he would go nuts, right? So if he saw a stock take off and he wasn't a part of it, he'd go and look at the news for that stock. And if he thought that the researchers should have spotted that, he'd stop trading and shout at them for an hour, missing lots of opportunities in the process. Now, it's the reason he actually had a really high turnover in research. It's the reason my friend stopped working for him. And his behavior is completely unnecessary, but it was just the way he was, right? Quite possibly his behavior, he was quite possibly bipolar and almost definitely quite an a-hole. Now, on the other hand, what he didn't do when he was like this was take it out on the market. So he didn't chase trades, he didn't revenge trade, he didn't try and get on the instrument after the event. He just shouted at some guy in 100th of what he was. So there's this pervasive view that you have to be some sort of cool as a cucumber, Zen-like meditation master to be a trader. That you should never get excited when you win or annoyed when you lose. And I've seen zero evidence that this is the case. I know prop traders that regularly break keyboards, right? Now, I've never personally taken out my anger on a piece of computer hardware. It's just not me. It's just not something I would do. But some people do. So for some, successful traders, it can still be an emotional game. So I've not seen any evidence that you can or need to switch that off. Now, what's interesting about the really angry guy was simply that he saw no upside in taking the emotions to his trades. He would much prefer to shout at somebody. So you would think that somebody that rants or somebody that smashes a keyboard in that moment has actually lost control, right? The moment you start throwing a mouse across the office, right, you would think that guy's lost control. But it seems that the successful emotional traders haven't taken the emotion out of trading, they just simply don't channel those emotions back into trading by revenge trading. Now, I can't prove cause and effect here, but the trades I meet, it seems like a really big coincidence that many successful traders trade a style that on the surface appears to match their personality. So there's a very famous trader out there called John Grady. He trades US Treasuries and they're very slow. And if you talk to John, I can't do his accent, but he talks really slowly and very calm, and his voice is always level, and he's a very calm, placid guy. Now, I know crude's a much more energetic instrument, and I know crude traders that are very energetic. So if you go to a prop firm, you might be surprised to know that a lot of professional prop firm traders that trade on screens right now, this day and age, they are a little bit nerdy, right? Or rather, they're not the kind of Wolf of Wall Street types you might expect. They're not jocks, they're not alpha males, and you may have even kicked sand in one of their faces in a trip to the beach. So like I said, this one's hard to prove either way, but it's noticeable as you talk to people in the industry how successful traders seem to be trading a market that matches their personality. Now, of course, if the personality that you have is something you can't change, then one of the things you can change is the actual baggage that you bring to trading, because that does affect people, but it is something you have more control over. You can't change your personality, but you can change the things that are impacting you. Now, when we talk about baggage, the things from life that affect your trading, I don't see that as something that's only negative, right? So there's positive and negative baggage you can bring to trading. And it's up to you to what extent you allow these things to impact your decision making. Now, the majority of trades I meet come from a middle class background. I've met very, very few successful traders that grew up in an environment where money was scarce. Now, I've discussed this with psychologists and NLP practitioners, and their kind of feeling is that many people hit a ceiling in their success because inside they actually feel they don't deserve to be successful. So it's like a self-imposed glass ceiling, that the effort put in as a trader for such huge rewards is not something they feel they personally deserve. So people go through the motions, but they self-sabotage. Now, that doesn't mean you lose trades on purpose, just that subconsciously they know the right path and the wrong path, and they choose the path least likely to succeed, right? And that's certainly an explanation for a lot of the irrational behavior that you actually see in traders. Now, middle-class people are raised around more wealth. So their ceiling in terms of what they feel they deserve or what they feel like they should get back, it's just simply higher than someone whose parents had to struggle to put food on the table, right? So the simple fact that some people grew up in an environment where money was scarce seems to hold them back. It doesn't mean you can't fix it, but if that was you, you need to take a long, hard look at that. Perhaps go and see an NLP practitioner, not a trading psychiatrist, an NLP practitioner to understand your relationship with money, understand your relationship with wealth, and understand your relationship with success. Then come your hobbies. What did you do as a kid? Were you in the soccer team, running squad? Did you play an instrument? Did you play chess competitively? If so, a professional firm would choose you over someone without those things because they feel you've got a higher chance of success. And when I say success, I should put an emphasis on the sucking part of that, because for anyone that's ever played an instrument as a child, you'll know that you sounded absolutely awful on day one, and you still did at month 3. And it wasn't really until a year in that you started to be rewarded with sweet sounding music. And it was probably just your parents pushing you to carry on that stopped you from quitting. And that's just like trading, right? you're going to be terrible at it for a year, usually. You're not going to be terrible at it for 5 years or 10 years, right? If you get good education, you're going to suck for a year, but then you're going to start to see payback. So you suck, you repeat, you suck some more, you repeat, and eventually you stop sucking. And there should be an upward sloping curve where you're improving as a trader. Now, what some traders do with constantly switching techniques, it's a bit like playing piano one week, switching to violin the next, then the saxophone the next, and so on, but still expecting that at 52 weeks, you're then going to be a musician. So for many successful people, the other thing that holds them back is their career, or their career before trading. So proprietary trading firms, generally, when these professional firms look for new traders, they like to take people straight from university, right? Not because they need the education, but they like their traders young and without any bad habits. Because for many people, especially people with high IQ, they find it very hard to shake off their career experience. So a good example would be pilots. They're one of the worst offenders. So pilots come to trading. What do they want? They want a dashboard. They want a cockpit of instrumentation that tells them at a glance where all the key metrics are. So they often spend their time looking for the right combination of these instruments in their dashboard to make them a trader. So then it screens full of stuff which may well help you fly a plane, but won't help you trade. So it's almost guaranteeing analysis paralysis. They think cockpits work in a plane, cockpits must work in trading, right? Then you've got nerds, especially programmers, who try to find a solution as if trading were a Sudoku puzzle, because that's what they do at work. That's how they see the world around them. They see that trading has numbers, prices, volume, bids, offers. So they presume some magic formula is going to break that code. So they decide that the approach they take to solve problems at work will solve the problem of trading. Again, it's the hubris of thinking that trading will bend to your career skills as opposed to you learning how to trade. So the best way to wrap your head around this as a successful person, whether you're a senior manager, a pilot, an engineer, a business owner, a florist, a baker, whatever you do, right? If that career was perfect for trading, prop firms would be recruiting within your industry. If your career skills were a factor of success, they would be coming to companies like yours and recruiting. Instead, they prefer a blank slate. So if you're a pilot and headhunters aren't calling you up trying to give you a trading job, it's probably because the skills aren't transferable. And it's one of those things that would be great if it was right. I mean, it's a form of self-sabotage, right? So if all those years spent stacking shelves in Safeway put you on the path to be a successful trader, it would be fantastic. That whatever job skills you had, it would be perfect if those things made you a trader. But my observations are that the less you bring to the table, the less you bring from your career to try and bend to trading, the higher your chance of success. Now, here's one that gets people. How clever do you have to be to trade? Well, it depends what you mean by clever, really. Now, what we term as IQ actually usually refers to a form of analytical intelligence, and it's definitely a factor in success, right? But obviously, I know thousands of traders, right? I meet traders every day, but I don't go around giving them IQ tests. So I don't know the IQ of all the people I know. I don't know the IQ of the successful ones or the unsuccessful ones. So I can't give you the IQ of the traders I met. But what does stand out when you talk to people who are successful is the blend of intellect, right? So if you've ever worked in IT, then you've probably come across people that are extremely high in IQ, but extremely low on common sense. So I've been in IT planning sessions where high IQ individuals would throw out estimates of between 48 hours and 4 months and be dead serious. You know, how long is it going to take? Oh no, between 2 days and 4 months, you know, for a piece of work. These people are extremely clever, but they're low on practical intellect, right? So they're people you love to employ, but you'd absolutely never put them in front of a customer. Now, those people are not hard to spot. I've never seen one make it in trading, although I've seen traders employ quants that are like this. So I know they work in the trading industry, but it's traders employing them to do risk management, modeling, but not the actual trading. Now, one of the up-and-coming retail traders I'm working with, he's got an interesting job. He sells second-hand cars. So he buys cars at auction, takes them back to the shop, gets them inspected, failures go back to auction, basically at no loss, and the rest just go on the lot after a spit and shine. So he and his team then have to convince people the cars are a good deal, negotiate them with them, possibly sell them a warranty, all that kind of stuff. And in all this, He's got to pay his staff's wages and commissions. He's got to pay the rent. He's got to pay for repairs. He's got to implement staff bonus plans. And at the end of the month, he has to make a profit. Now, if you think about all the different things he has to do, he's obviously got a mixture of like practical, creative, analytical intelligence. He's not Stephen Hawking, right? But he started trading a year ago and he's already thinking about selling his business. Now, one trader I met a few weeks back, he'd done something strange. He'd scaled into a position with the market was going sideways and asked him why. And he said, well, I've got a really hard time telling where the market's going to go when it grinds sideways like that. And of course, the correct answer to this, the practical answer to this was, at that point, if the market's going sideways, probably nobody had any idea where it was going. That's why it was moving sideways. So it's better to scale in as it moves away and not try and just trade that chop. That's common sense, right? That's common sense. He's lacking in common sense about the market. So it's difficult to gauge somebody's intellect. But if you look at the abilities most of the accomplished traders have, the ability to see new patterns and trade them. That's a creative ability. Right? Being able to adjust your technique to current news events. That's more like street smart intelligence. And traders that I've met, they're not high on the analytical intelligence. They've just got good skills across the board. But I'll also say that I don't spend time in the HFT world where I'm sure that balance would be different. I'm dealing with people who trade their screens, right? So if you can understand where you fit in this model, then you can play your strengths as you can with your personality. So if you're massively high on analytical intelligence and you've got no common sense whatsoever, then you shouldn't start day trading the markets. You should try maybe get a role in an HFT firm or start maybe writing algorithms, something like that. Now, the other factor of success is time. So there are very few people that become an instant success at trading. I mean, I recently received an email from someone, he works 2 weeks on and 2 weeks off. So he's in the oil industry. So he's got 2 weeks out of every 4 weeks to trade full time, 100% of the time, right? And he asked me if he should be using market replay in the evenings of the 2 working weeks. And the answer for me was absolutely not. So you've already got more screen time than most employed people. So actually this guy was already ahead of the game. There was no upside really in spending time doing replays. So with him, he was really thinking about total time spent versus quality time spent. So he thought he needed to spend some time all of the full weeks instead of just having good quality time every 2 weeks out of 4. And replay, using a market replay, that's not quality time compared to being at a live market. Think about it. In a live scenario, you're going to sit down in the morning, you're going to look over the news and what's impacting the market. You look at what happened overnight and then ding, ding, market opens and you move with it. Compare that to market replay after work. You're tired, the news has already happened, so you're not really trading anything new. Replay doesn't really move in the same way. That's lower quality time. So it's rare to meet a retail trader that isn't willing to work hard, measured by the amount of time spent. At the same time, it's also extremely rare to meet a retail trader that will only focus on effective tasks. So for a lot of people, trading is like a drug or like a game of Space Invaders. They're totally addicted. So they're watching markets all of their spare time, always trawling YouTube, forums and all that kind of stuff for information on how to trade, waking up to pee in the night and checking their trading screens, absolutely normal to them. So these people are basically on the high end of like the elapsed time spent, but on the low end of effective time. Now, if you go to a prop firm, they'll basically kick you out if you don't focus on effective tasks. So this table here should not really be a surprise to anyone. Most traders understand this conceptually, but they don't execute along these lines. The vast majority of traders focus just on these top 4 activities, right? If that's you and you know it, this is something you will need to change to be successful. You will not be successful if you only focus on these top 4, right? So basically, only one of these tasks, only one of these tasks is really effective, the clicking buy and sell, but it's not the most effective you can do. And you lose the effect because you're always looking for a new method all the time and you don't perform some of the other tasks below. So traders put time in, but a lot of the time they're basically just playing Space Invaders. And for a lot of traders, it's the self-imposed glass ceiling that pushes them towards ineffective tasks, right? So they're focused on things that they truly understand are less effective, either to have fun or just to self-sabotage themselves. Now, one of the biggest benefits of being in a professional trading environment is you have absolutely no choice over this. You have a boss that tells you what to do, so there's less freedom of choice. And that is one of the biggest advantages of being in a prop firm, right? They'll kick you out if you don't do what they say. Now, how consistent are successful traders? Well, I think first we have to consider what it means to be consistent. Do we mean consistent results or consistent behavior? Because most trading methods will not give you consistent results, right? There are some maybe multi-day spread strategies yielding a tick after days in the trade that behave very consistently. But for outright traders, buy to sell higher, sell to buy lower, the most consistent behavior will give you inconsistent results. So returns on trading are lumpy, they're inconsistent. There is no, I'm going to make $1,000 a day. You might average $1,000 a day, but there is no method that will give you $1,000 each day, simply because the market is not consistent in the opportunities it makes available each day. You look at today, to make money today on the S&P, you'd have had to be patient and wait for that. There was a range that built, and we head faked out the top of that range, went up to 66, turned over, went down to about 59. Great opportunity, but before that, really not a lot off, not a lot on. And it wasn't a great opportunity compared to a day where Donald Trump's on Twitter all day and the market moves 100 points, right? So today, it was a low yield day. So consistent behavior will not give you consistent results, but in a prop firm trading outright positions, the goal for newer traders is to first achieve consistent results. And that's kind of confusing. So a newer prop trader will be focused on consistent behavior, very narrow range of techniques, and a marginal profit, maybe a few $100s a day. They also have a maximum drawdown, and if they exceed that, back to the simulator. Now, this is smart, but it's also unrealistic. And the idea that you can have a static loss limit in a variable market. So what do the smart prop firms do? Well, on days when the market is particularly poor, they're going to let traders have a bigger drawdown. So the trader might end the day below his maximum drawdown and think, oh, I'm going back to sim tomorrow. So let's say they give him 1,000 drawdown. On live money, he might go back to his boss and he's lost $3,000 and he thinks he's going back to sim tomorrow, but the boss will have a look at that and say, well, you know what? That was a crappy day. Nobody did well. We'll let you carry on live tomorrow. Because you know what? That is using practical intelligence. That's the firm using practical intelligence. They give limits, but they're flexible because the markets are inconsistent, right? So you have rules to stick to, but if it's beyond your control, they will be more forgiving, right? Who knew? Now that covers exceptional losses, but there is a flip side to that. As traders progress, one of the steps is to make more money when there is more opportunity. And this doesn't mean using a completely different approach. It's more a case of adjusting your size when conditions are favorable. So consistency long term is all about being able to consistently take the opportunity that's available. Now, it's obviously going to lead to inconsistent results, which means there's going to be big days when there's more available. So if you're making $200 a day and you're doing the same when the S&P drops 200 points, you are not making the most of the opportunity available. The big days allow you to lose bigger on the smaller days. It takes the pressure off you. It allows you to have a lower win rate. It's your cushion. So the ability to trade larger when there's more available is key to long-term success in a proprietary trading firm, trading outright positions. It's that capability that takes you from, yeah, he's okay, to, yeah, he's in it for the long term. So getting profitable is just a step on the path to development. But taking advantage of that inconsistency of opportunity is absolutely key for longevity as a trader. Now, there's a few things that we need to touch on before we come back and tie a bow around this topic, and that's the common killers. A few years ago, I was in touch with an aspiring trader, and I helped him in a very, very small way to get into a prop firm. Now, at that point, he had about 35,000 sterling in savings, and he got himself into a London prop firm who were paying him about $700 a month. And basically what they do in prop firms, they basically give you enough money to starve on. They don't pay you a salary, but they will pay you enough to starve on. So this trader was in a prop firm. He was leaning on his life savings. He was not paying the firm any money. It was a legit prop firm. He went through the training program that they paid for, then onto the trading floor where he had to prove himself on sim. Day after day, what he did was tweak and change and modify his trading and not do anything consistently. He didn't listen. After 6 months, the firm stopped paying him the $700 a month. But they said, look, if you want to stay and carry on and see if you can make it, we'll pay your desk fees. We'll pay for all your software. We'll pay for your desk. At 9 months, the $35,000 was gone. He ran out of money, had to go back to work. All because every day he felt there's something more. He needed. It can't just be this simple. It can't just be making a decision based on A, B, C, and D. And he never buckled down to get good at what they taught him to do in that first 3 months. Okay? And that change in techniques continually is the most common killer for traders. The next one is something called the sunk cost fallacy, right? It's a big one. It's the inability to stop using a particular thing that isn't actually helping you purely because of the time you spent on it already. Okay, so it's like saying, I can't stop using moon phases in my trading. I've spent too much time on them, right? So you might know GAN inside out. You might be able to write a book and have encyclopedic knowledge on GAN. And if you discover, like most people do, that it doesn't have any relevance to the markets, if you believe that, right, up to you what you believe, you've got to throw it away. You have to cast it on side. It doesn't matter how long you spent, right, if it's not helping. Another one, a bit like changing techniques, is the greener grass. And it's the idea that somebody else's technique is easier. And I can hand on heart tell you that what I do personally as a trader is not difficult for me at this point in time. And I can explain it fairly simply. But when I do that, I don't explain the cost of getting to that point. And nobody does, right? I don't explain the frustration in making it work for me. I don't explain the off-plan trades. I don't explain looking in the mirror and calling myself an idiot on the days where it just wasn't working. I don't explain my wife coming to the office and saying, are you okay, Pete? Who are you shouting at? Okay? So while you're at the stage where it's extremely tough, it's natural to think that it's because your method is particularly tough, while someone else's isn't. Because you know what? When somebody tells you how they trade, they don't start crying when they tell you. They might have cried a few times when they were learning, but they don't stop crying. They say, I do this, this, and this. But you never ask them, how much did you cry? How much weight did you lose? How much weight did you put on? How much hair? Nobody asks you those questions, right? So you get this description of how somebody trades, and it's like, well, that's easier than what I'm doing, and hence the grass is always greener. And the bottom line is there is no easy method, right? We all have to work through a number of issues to basically make it as a trader. Now, one of the recurring themes on internet forums is about whether trading is gambling or not. Well, I think that's an interesting question. And I can relate to points on both sides of the argument, right? And after years of working with traders, I think the most significant question actually is not is it gambling, is which form of gambling does it most resemble? Is it like slot machines? Is it like blackjack? Or is it like poker? Now, just to be open with you, before I came to trading, if I went to a casino, I'd be happy playing slot machines and blackjack. I would not go near a poker table because my gut feel was my inexperience at poker would mean the other guys would take money off me, okay? And I'm supposed to be smart, right? So I'd look at poker, a game of skill, as something I could never win. And I'd look at the slot machines and blackjack, where I was absolutely mathematically guaranteed to lose, as something safer, right? Ridiculous, really. So if you compare these games, slot machines, blackjack, and poker, to trading, slot machines are the equivalent to the uneducated trader that buys systems that guarantee to make money for you. So this is a trader that goes out, buys a system, doesn't care why it works, hasn't done the math on the value of such a system to the price he's buying it, follows it and loses money until he doesn't have any more coins to put in. That's where most people start out. The blackjack equivalent is your more savvy trader. There's a few rules to learn for a start, with blackjack: insurance, stand or hit, splitting, that kind of thing. And you can improve your odds by following certain rules. What you can't do, though, is win, right? So the equivalent of trading is somebody that's got their act together, understands what moves the market, but is forging ahead, trading something without really understanding if it's going to win or lose over time. And the reason that's similar to blackjack is a trader's basically playing on hope. There's a hope that you'll win, right, despite the odds or despite not knowing the odds. So lots of traders trade live, lots of traders lose. Very few traders can tell you, right now, this technique I'm using looked like it should have had about 2.5 profit factor, but I'm only getting 1.2 trading it live. Not many people can tell you that, right? The poker players are traders, and I mean good poker players, not people like I'd be, because I'd be terrible. These are the guys that understand the game and the approximate odds of winning. And this is one of the things I see repeated time and time again with traders that make it. They're as keen to trade as anyone else. They just basically have a slightly higher information threshold. They want to have an idea of whether it will work before they commit money. It's not a guarantee they're after. It doesn't take a PhD in statistics. It's just one additional question that they want answered before they commit real money, and that is this actually likely to work? Now, another way to think about this, 95% of my customers are men, right? And my opinion is that a good way for a married man to decide whether to put real money on the line in trading is to get his wife to review the decision for him. I don't apply this to gay men, because a man and a male and female relationship is a very specific dynamic, right? Men are not very smart, right? Women have just got like a lower risk threshold, right? Now, what it does as a trader, that raises the information threshold, right? Having to get your wife to agree to you trading live raises the information threshold. She will want more information about how likely this is to work than most men will have. And of course, men hate this idea, yeah? Because most love the blackjack state of trading. They really love their spare time playing buy and sell Space Invaders. Another way to think about it, right? You've got a friend that's sim trading. He says he's ready to trade. He says, look, give me 50,000. I'm ready to trade live money. But he's a sim trader. What is it you would need for him to give you the confidence to give him the 50,000, right? Information threshold, what did it do? Just went up again, right? In other words, traders will happily play blackjack with no edge, with their own money, setting a low information threshold for their trading. Now, of course, many traders do actually improve with this blackjack approach. Their account swings this way and that way, doing no real damage. And they're getting used to seeing a loss and then recovering and thinking they've got skills. But it's not really their skill recovering a loss. It's just a zero-edge system swinging up and down, which for some leads to the true gambler's ruin, which is trying to win it back, which is the end game for many traders. No edge, pure blackjack trading, but with the added confidence of seeing a negative balance turn positive sometimes. So you think when a black swan event occurs that hits you way offside more than usual, you think you got the skills to win it back, right? Which is why I'm sad to say I've met traders that have lost hundreds of thousands of dollars doing exactly that. I've seen people lose their homes and people lose their marriages, and all from one really simple flaw. That is setting the information threshold for getting into a trade way too low. Now, the good thing is, and we will have some time for Q&A here, so if you've got some questions, please start typing now. The good thing is, this is not all doom and gloom, right? So I've seen trading webinars where the presenter make it seems like trading is an unsurmountable task. And then I see the way that traders get in their own way, and it makes you realize how really this is more about removing self-imposed obstacles than having some magical piece of knowledge or having a particular skill set, right? So the most difficult part for traders, the most difficult part for you and me and everyone else is recognizing and getting rid of the baggage, right? So if you were raised in a poorer household, I probably said some things today that annoyed you, right? My dad works in a factory. My dad worked in a factory all his life. Now, I couldn't have the brand name trainers when I grew up, and it was just, I always grew up in an environment where money was scarce. And I didn't understand about NLP or any of that stuff until I just went on a business development course and there was an NLP course in this business development course that I bought. And I went on this NLP course and I found out about my relationship with money. This course was nothing to do with trading, but I discovered my relationship with money, and it was just something that really surprised me. That, you know, I would work 16 hours a day because my dad always told me you had to work hard. And so I worked hard, and other things my dad had told me about scarcity of money. I just felt money was scarce. And if you can let those things go, then that will not block you anymore. So if you came from a poorer background and you're annoyed with me for saying you're less likely to succeed, you can do two things. You can continue to be annoyed with me, or you can just discover your own relationship to money and sort it out, right? Because there might be a part of you that inside feels you don't deserve it, feels that you don't, for instance, want to be earning every week what your dad earned or earns right now in a year, and you feel you don't deserve it, and as that gets closer, you actually push yourself subconsciously further away from it, right? So if you're a pooperer, just get yourself out of that poverty mindset. Psychologists, NLP coaches, very, very, very common, and you don't need a specific trading coach for this. You can go and find someone in your area that does NLP. Now, as traders, basically, it's your job to decide if this is something you really want to succeed at, or if it's a fun hobby, right? So if you're sitting there and telling yourself, I can't stop taking off-plan trades, I can't stop taking off-plan trades. Oh my God, I know what I should do, but I don't do it. The answer to that is, yes, you can, right? You can. You just need to work on it. You need to make a decision. You need to find out where it's coming from. You need to work on it. You need to stop doing it. But don't tell me you can't, right? There is no I can't do it, right? You've got a behavioral problem and you need to figure it out, right? Now, if you Google losing weight online, what are you going to find? Thousands and thousands of easy ways to lose weight. Fads that don't really work. And you know what? You didn't even need to Google them in the first place, right? You didn't need to Google them in the first place. Eat less, exercise more. You'll lose weight. It's not fun, but it's what you need to do. But fat people who are unhappy with their bodies will go and buy fad diet after fad diet after fad diet. You know why? They know it's not going to work, but it's just got to be easier than eating less and exercising more, right? Exactly the same with trading. If you keep buying the latest, cannot lose, guaranteed to make millions, method, widget, whatever, it's just another form of self-sabotage, right? You know it's not going to really work. You know that if the guy selling it to you was really selling you something that was guaranteed to make everybody money, you wouldn't have just heard about him, and you wouldn't have just heard about him wherever it is you're finding him. He would be all over there, be on the TV, right? It just feels like forward progress when you go and buy that things. It feels like you bought something that's putting you on the path, even though you really know it's not going to make you any slimmer. So that's why today I'm not actually going to try and sell you anything, right? I just wanted to give people food for thought and have a think about the things that are getting in their own way, right? So what I will do is I will give you a chance to see what it is that separates perpetual losers from winners from a technique perspective. So we've talked today about some developmental, some mental aspects of making it as a trader. And in these videos, we're going to show you some techniques used by proprietary firms, some of the firms I work with in London, that have some of the most successful traders on the planet. So if you like what you've heard so far on the mental side, that you think, that some of the things that we've talked about before, you might identify with and you actually relate to them. We know, I'm sure you can get the slides if you email me. If you go to jigsawtraining.com and request the slides, I'll send you the slides. No problem with that. If you feel that resonated with you, you will love our take on the trading side. So this link, I'm going to leave this link up for a couple of hours after this session ends. Absolutely free. And for those ready to cast off the self-sabotage, this is your next step, actually using techniques that are going to work to, taking control of your trading destiny by, learning what really matters when it comes to trading decisions. And with that, I will open up for questions if we've got any. I think you're all very quiet by the look of it. Either I can't see the questions or you're not asking them. Somebody just type a Y in the question just to make sure I can see it. Well, it's a little song and dance at the end. Thanks. Good, good, good. No questions. Did anybody identify with any of the things that we talked about today? Yipper, there's nothing I'm going to show you in terms of trading techniques today. What we're really talking to you today about the things that hold you back and the things that are outside the technique that will help you make it as a trader, right? Trading is not just about technique. It's a big mental game and you have to get ready for that, and you have to, put your big boy pants on basically when it comes to, what you really need to do and what's really affecting you as a trader. Yeah, Jamie, I'm a blackjack trader as well. I used to play blackjack all the time, and it's really funny. I didn't play for about 10 years, and then I went to a casino in Singapore, and I walked up to the blackjack table intending to play, and I just didn't. I got up there, and I just realized I got up there, I'm guaranteed to lose. I'll sit down at this, no matter how much money I take with me, I'm actually guaranteed to lose. I just couldn't bring myself to do it, and what killed blackjack for me was trading. That once trading had clicked with me, casinos bore no interest, and I would play poker, but honestly, I've got a terrible poker face. Can one trade successfully from charts versus trading off order flow and the dome? Absolutely. I know people who trade off the charts. The prop traders, the biggest traders I use, don't use charts. They're trading off the dome. So there's lots of ways to make it as a trader, but you've got to kind of really understand yourself and what's making you behave in particular ways and what's making you make the decisions that you're making. But yeah, there's lots of ways. We have our way. We deal with prop firms, so we tend to stick with those techniques. And with that, I'm going to bid you farewell and hand back to our host.